The yen weakened by 1.3% in September, with the BOJ trade-weighted yen index recording its lowest level since February 2016. Following bouts of political uncertainty in Europe this year that undermined the euro, financial market attention is now shifting to Japan after Prime Minister Abe last week announced a snap general election, scheduled for the 22nd of October. Prime Minister Abe appears to want to take advantage of a modest rebound in his approval rating, after his net approval fell to its worst level since coming to power in December 2012. The LDP held 287 seats in the Diet just dissolved, and combined with its coalition partner New Komeito, held 322 seats, an 84-seat majority. The LDP is likely to lose seats, but is also very likely to maintain its overall majority. From a foreign exchange perspective, we are not expecting the general election in Japan to trigger yen weakness. The yen is currently weakening, but this is more a reflection of central bank policy divergence. Dollar yen has advanced by over 5% from the low point in September, mainly due to increased speculation of a rate hike by the Federal Reserve in December. Other central banks globally have either already shifted their monetary stances or are expected to, with the BOJ likely to be well behind. The yen on a year-to-date basis remains the worst performing G10 currency versus the US dollar. But we are not convinced this yen depreciation will be sustained beyond the election. Firstly, we suspect the Federal Reserve will act very cautiously in raising rates further, implying that the yield carry will remain much less attractive than usual at this stage of a US tightening cycle. Secondly, an election victory for Prime Minister Abe is unlikely to alter the current scepticism over the success of Abenomics in lifting inflation in Japan, evident by the trend weaker in inflation expectations this year, a dynamic that discourages yen selling. Finally, we believe the greatest risk from this snap election is Prime Minister Abe doing worse than expected, which would only intensify speculation over the longevity of Abenomics and BOJ easing, which would help support the yen. Unlike the investor enthusiasm that greeted Emmanuel Macron's election victory in France earlier this year, victory for Prime Minister Abe later this month will at best merely confirm more of the same, or at worst intensify uncertainty over the outlook for Abenomics, scenarios that are unlikely to encourage renewed yen selling.